In this video, I'll show you how futures trading works on Binance, how to long the market, how to short it, and how to place a trade step by step. Let's start by looking at the Binance interface and how to access the futures trading section. When you open the Binance app, you'll land on the homepage. From here, you can see your account balance, market updates, and different services Binance offers. At the bottom of the screen, you'll see the main navigation window. The key tabs are Home, Markets, Trade, Futures, and Assets. To start trading futures, just click on the Futures tab. If this is your first time accessing futures, Binance will ask you to activate your futures account. We've made a dedicated video showing you how to activate your account. I will leave a link to it in the description below. Once that's done, you'll be taken to the futures trading interface. At the top of the futures section, you'll see the different types of futures contracts on Binance. We're going to focus on the first two for now. The first one is US dollar stablecoin margin futures. These are settled in stablecoins like USDT or BUSD, which means your profit and losses are paid out in stablecoins. The other type is coin margin futures. These are settled in the cryptocurrency itself, like Bitcoin or Ethereum. So if you're trading Bitcoin futures, your profit or loss would actually be paid in Bitcoin. Your collateral will also be in crypto, so this can be more risky since they are more volatile than stablecoins. For this tutorial, we'll be using US dollar stablecoin margin futures, which is what most beginners use because it's simpler to track your profits and losses in stablecoins. Below that, you've got your trading pair, which is currently set at BTC USDT. If you click on that, you'll see all the other options that are available. We've got the order book on the left showing buy and sell orders, and the order panel where you can place your trade on the right. This is where you'll be able to open both long positions if you believe the market's going to go up, and short positions if you think the market will go down. The margin mode is currently set on cross. If we click into that, we'll see there are two options, cross and isolated. Cross margin means your whole futures wallet balance supports the trade. So if your trade starts losing money, Binance can use more money from your wallet to keep the trade open and prevent a liquidation. As a simple explanation, you open a trade with $100 and you have $500 in your futures wallet. If the trade starts losing money, Binance can use some of that extra $400 to keep the trade alive. The risk here is that if the trade goes really badly, you could lose a lot more of your wallet, not just the $100. Isolated margin means not only the money you put in that trade is at risk. Binance will not touch the rest of your wallet. For example, if you open a trade with $100 and the trade goes really badly, the most you can lose is that $100. Your other funds are safe. Then we've got the leverage, which lets you control a bigger trade than the money you put in. As an example, if we set the leverage at 4x and you put in $100, you can control $400 worth of Bitcoin. This means that your profits can be bigger, but your losses can be bigger as well. Below that, we've got the order type. The main two that I'm going to look at is market order and limit order. A market order means that you buy and sell immediately at the current price, so the trade happens instantly. A limit order means you only enter the trade if the price reaches the price that you choose. For example, if Bitcoin is trading at $69,000 and you place a limit buy order at $68,000, your trade will only execute if the market drops to $68,000. Then at the bottom, we've got going long versus short. You go long if you believe the price will go up and go short if you believe the price will go down. This is why futures are so powerful. You can trade in both directions. Great. Now that we've got the interface done, let's get into placing our first trade. For the sake of this video, we're going to do a US dollar stablecoin margin futures. We're going to do the BTC trade, cross, and we're going to set our leverage at, let's say, 5x. Then we want to buy $200 worth of Bitcoin. Well, Bitcoin contracts. Now, the amount that you put here is the leveraged amount. We currently only have $164 in our account, but I can place a trade for $200 because I have that 5x leverage. So my money that's actually going to be used in the trade is 1/5 of $200. I believe the market is going to go up, so I'm going to take a long position. Look at the details and confirm them, and click on confirm. Once that's done, you'll see that you've opened your first futures position. At the bottom, we can see the information about it, our ROI, the size of the trade, the margin. The margin ratio is really important, guys. The closer this gets to 100%, the closer your position is to getting liquidated. And that's it. You've successfully completed your first futures trade. If you guys found this video useful, please subscribe to the channel for more content like this. We'll see you in the next one.